it's been difficult, or it makes, some kind of an hesitation within us that, do we really need to do it? Someone asked me, is it okay? I know I do my increments in October, November, October first week. So can I do it then? I said, no, that's too late. It's risky, right? But this is even more riskier to know that we have so many people here in this room and nobody is ready to raise their hands that labor code is done and dusted. Okay, having said that, I will now take you through the journey from draft rules to the final rules, and then we will have exciting conversation on labor code as well. But I'm going to ask you a few more questions and let's keep it interactive. And I would love to hear questions from you as well. Yeah? Let's go. So one, yes, the final rules is finally on the Ministry of Labour website as well. So this was, I think this was released on 8th, 2 codes, and the 9th, so followed by. So the 2 consecutive days we received all the 4 codes, right? But originally, the draft rules was announced. Can anybody tell me, when is the effective date of Labour Code? 21st November. Wow, I'm impressed. 21st November. So I think 2025. 21st November 2025. Great. So now let's move on. Right? In terms of legislation, in order to understand a little bit, what really is the labor code? Why do we really need it in India perspective, right? It is important to know that our company laws are even as old as 7 decades. Can you imagine? Right? Right from, we had more than 29 labor codes, central labor codes, which, in most of the scenarios when the judgment was being done, right, you used to interpret looking at, oh, such and such a case, oh, this was the judgment, and hence, oh, so this is the, wage code definition, or this is the definition for. So such is the state of our company law. So yes, this is the most important reformation that was required from a company law standpoint from an India. And yes, it actually, gives you a pitch to say, hey, this is too much, there is a labor cost involved, the cost is increasing, this is a bad time and all of those. But it also helps a lot of organization going forward, in order to so basically, help you, in the ease of doing business. Yes, that will happen. But immediately you will see that this is painful, this is impactful from the cost perspective, right? Because you have a 50% rule, there is something called gratuity, there's something called deemed wages that you need to understand, right? There is, from a draft to final, what has really changed, right? So all of these, let's look at in a couple of minutes, right? We'll go one by one from a journey standpoint. First of all, from a legacy part that we spoke about. So our company laws are as old as even 70 years. We have done so many amendments, but I think none of them are in sync with each other, right? Coming to the first labor code that we spoke about, it started in the year 2019-2020. I should ideally keep this labor code 3.0 and not 2.0 that way, right? So, but yeah, the draft rules and the reality came in. The historic moment for Indian company law compliance part is 21st November 2025, right? Then the final rules, which came in the month of May, 8th May and 9th May, right? And if somebody asks me when is it effective, it is 21st November 2025. Okay, what has really changed? What has happened to the 4 impactful codes? So if you really look at the 4 codes, 80% of the law is the same. It's a copy paste into the labor code. But what has changed is 20%, and that 20% has caused 80% of headache to a lot of us, right? So from the code on wages perspective, single wage definition, I think, was something that all of us were looking for. Now it's a reality, but we may not like it when you really look at it in detail, right? And it always talks about 50% wage rule. In fact, it is not on basic. I definitely wanted to talk about that it is on deemed wages. Lot of people ask me this question. I have moved my basic to 50%, now I'm compliant. No, you're not compliant. Why? Because there are other allowances which will, like for example, our favorite allowance is special allowance, right? Which is a balancing factor in the flexi pay. That is going to cost you a bomb if you're not going to realign your wages to it, right? So when somebody says that I have realigned my basic to 50%, watch out. That's not compliance, right? So coming to, and of course there are few other changes from a draft to final rule. Not too much of a change, I would say, but the change is more in terms of how you can do your transaction with ease. Some of the forms have been released, right? What are the statutory forms that you have to, fill in have been released in the final rules. So coming to Code on Social Security, yes, gratuity has caused some kind of a pain. I will talk in the subsequent slide from a draft to the final rules, right? And gratuity has also been now. The fixed term employees are eligible for gratuity if they complete 1 year of service. Here is the story, right? When a lot of organizations ask me, when it comes to fixed term employees, every time they will tell me my contract laborers. No, your fixed term employees are not your contract laborers or not your contract employees. Contract employees are permanent employees in the third party role, right? Fixed term employees are actually those who are on your muster rolls, on your company rolls, and as the name suggests, they are only appointed for a fixed term. So those is what we are talking about here in the social security, right? Of course, there is a daycare allowance which has been mandated. While what the code says is you have to absolutely provide for the facility, but however, it also says that if you can't, then you have to take an employee consent and then you can agree for an allowance. While statutory minimum is 500 per month, but we know, I also come from Mercer Consulting and we do benchmarking. So there are a lot of companies who already pay this at a reimbursement from it ranging from a 7,500 per month to 15,000 per month, right? So that's what you can look at. Gig workers, I think in the history of law for the first time, we see that the gig workers and the platform workers are now covered under the Social Security Code, right? Coming to IR, so the enforcement of IR code is now relaxed to an extent that from 100 worker, it has moved to 300 workers, right? Another catch is, earlier, the IR code says that it is only applicable for scheduled employment, which ensured that the IR was applicable only for 13 to 15% of the organization. Can you imagine? That was the coverage. But right now, with the word of unscheduled employment that has been added in the IR code, now the coverage is 83 to 85% of the establishment come under the radar of IR code. Here is what I say, there's a lot of companies don't even know that the labor code is applicable to them, right? So now, coming to OSH code, main important part is the single registration which the labor code has enabled. Apart from that, another important aspect that the organization need to take care is review all your contract letters, appointment letters and policies, and it is mandated that you need to issue the appointment letter and it has to have certain statutory details. This is mandatory. Many people ask me, do I need to do it even for existing employees? Just yes. Because your existing employment order do not contain all of these details and hence it will be non-compliance. Okay, and one other important feature of OSH code is the health checkup mandated for employees who are more than 40 plus years. So coming to then, what has changed from draft to the final rules, right? I would rather say that most of the details that was in draft rules is the same that you see in final rules, but it has enabled a few transactional clarity for the organization to proceed further. But there is, like I said, there is one bomb that I will talk about it later. So then, coming to the each codon, codes that we will look at, coming to 50% wage rule. Right? Many talk about just basic being 50%, right? This is where I want to talk about. It's basic, dearness allowance, retaining allowance, plus other deemed inclusions. This is where a lot of organizations are doing benchmarking with the convenience and not compliance. Okay? So it is important that you need to look at what all wage component that you provide today in the organization, including all your one-time payouts, and then look at what qualifies as inclusion and exclusion, and then arrive at the 50% rule, right? So that is when you will use that information of 50% for wages to compute the PF, the gratuity, and even the statutory bonus or any statutory mandate like a overtime, or a statutory bonus. All of it will be computed based on deemed wages. So someone asked me, will notice pay also? Yes. However, you need to be careful. If you are already providing notice period on gross salary, you are already generous and you will continue to be generous and not bring it back to deemed wages. Right? So the law also says even a lot of organizations pay leave encashment on total gross. Doesn't mean that you now can come back to deemed wages. So you will continue to pay on gross because you're already generous. Okay? It's law. No. See what the law says is if you're already generous, you are not supposed to reduce your benefits. Yeah? Sales incentive is very different, right? See, it is not statutory mandate. Sales incentive is more of your company position and you would want to pay it based on a revenue or certain other parameters. So it will continue to be on your company position. That doesn't have any statutory obligation on it. While leave encashment, notice pay, overtime, ESI computation is on deemed wages now.
Even for new employees, same rule, you are generous, even for new employees or only for existing, you can't revert back.
See, if you have a company policy, you can't change that, right? But there are certain things that you can bring alignment to new employees, like for example, PF, right?
There were also law for decision, car elements and things like that.
Yeah.
Car
Car allowance, right? See, car allowance is a very tricky thing from the allowances standpoint. But I will also clarify, being a total rewards person, I'll help you how you could interpret this from a law standpoint, right? See, the car allowance today in India, if you see, there are two types, right? One is where you drive it through the income tax and it's a salary sacrifice scheme, right? Which is mostly driven by the third party leasing and it's applicable for middle management and above. Okay? So that is one, and this is mostly from an income tax perspective, you do it. Right? That is more, you give them the allowances part in terms of petrol reimbursement and all of those. That can still be exclusion. However, we cannot manage the way we used to do earlier. What I mean is, what happened earlier? Earlier, we used to have a flexi pay scheme, right? And then I opt for a car leasing or a car lease, and then I also will opt for from a flexi pay, I opt for a petrol reimbursement and I opt for driver reimbursement and all of it. Month on month, some months I produce bill, some month I don't produce bill, right? But towards the end of the year, that is March, you still get it as petrol reimbursement or a car reimbursement, but a tax is deducted, right? That's a true story, be it LTA or whatever it is today. In this form, it is not exclusion. because we are not driving it 100% through reimbursement. So there is a way to it. Of course, we do. That is where we help a lot of clients in aligning. So you need to align this with an exclusion component, and then whatever amount, the residue amount that is not, people are not claiming, should come as an exclusion component and not in the same name that you opt for. So there is a certain alignment and a realignment that you have to do in your wages, and then you can qualify that as an exclusion. It's a little tricky. It requires a lot of time and effort for discussion. But in a very layman perspective, if I have to tell, you cannot continue the way the flexi plan practices that we did earlier. You need to bring in alignment, one with the labor code and then with the income tax, right? And if somebody asks me why income tax gives, why not this, these two are different laws. They are not guided by each other. It doesn't intersect. Yeah.
Thanks. But I think question, there's no statutory component legally.
No, there's no statutory.
Yeah, so it would get excluded.
See, I'll tell you what, it is exclusion. Where it will hit you is when your exclusions go beyond 50%. Right? So then it will still get an add-on. So that is where you need to ensure. I am sure when you have multiple allowances that you put together, somewhere or the other you will reach a point where your exclusions is more than 50%. I have seen it in many cases. Right?
Ma'am, yeah.
Yeah?
Just raising my hand.
Yeah.
Okay. So this is pertaining to the meal coupons which we generally give to
Meal
employees.
coupon is a wonderful story. I'll talk about it.
Okay, you will talk about it? Fine.
Okay? You will all hate me after that. Okay? So not me, labor code.
One question.
Oh yes, sir.
If basic is 40 and you have your special allowance more, say around 30 or 40%, will that add up to the total definition of wage?
Yeah, absolutely. Unless you realign it. And it's high time it should have done by now.
Okay.
Yeah?
Will you also cover about PF in terms of whether the wage ceiling kind of PF and the 12% exists?
I will cover that. Okay? Fine. I think I know I have a lot of questions. I think my slides are not interesting. The questions are. So if you are okay, I will ditch the slides and I will go with questions. Choice is yours. Let me know. I'm okay. Okay. Questions? Okay, great. So now, let me then first start with the head story. Okay, this is the main crux of draft 2 final rules. I used to, multiple times use this element called, I think I by-hearted the page number also. It was a page number 185 in the draft rules under Social Security Code, which said that your telephone reimbursement, your meal voucher, including your variable pay, right? A lot of it is variable pay. I'll come to later. Meal voucher and everything is excluded if it is reimbursable, right? If it's reimbursement based. Now, in the final rule, that's eliminated. What does it mean? It means your meal voucher is now an inclusion. I told you, you will hate me for this, right? So be it. But in the final rules, they have destroyed the 185 page, or if I can say they have removed or eliminated, destroyed. It no longer is valid. So that goes to say they are more and more refining to say what is 50% rule that we understood, but our clients do not want to accept it because it is cost to them. Right? And moreover, added misery to this. It was only 2200. This year income tax made it 8800. Really? Right? That's what it is. So if I know you would not like it, but unfortunately I had to reveal this. Yeah, please go ahead.
So what I understand is with regards to the meal coupon, so there is a 15% markup which is there if it falls into that. Whatever is left over is added to your basic or something, the wage which we talk about, and that becomes part of your PF.
I'll explain to you a little bit. See, there are two ways that you can handle this. Now that we are in a mess, super mess, then how do we interpret this? There are two ways you can interpret this, right? One way is you can consider this as a remuneration in kind. Only add back a 15% of the meal coupon to the wages, right? And the rest of it still keep it as excluded. Or you take everything, safest, 100% optimal compliance, everything take it to inclusion.
So based on that, you were guided and gone into the communication. How do you
We have given the communication. See, some also said that we will still keep it under flexi plan under reimbursement because it's in voucher based, and we'll see what happens. It's a risk, but that's a reality.
it's the reimbursement kind of that?
It is a reimbursement voucher. While very few organizations give it as allowance. The moment anything is paid as allowances, except HRA and conveyance, the safest option today in labor code is HRA and conveyance. Nothing else is. Okay, and others are what? Your statutory bonus, any does not help you, right? Somebody who is 21K less, you give that 8.33 or up to 20%, that's mandated. Employer PF, you can't change anything in that. So nothing is going to change. However, when it comes to company car benefit, right, where it's traditional benefit that we offer to the organization, wherein it's provided to senior management and the key positions in the organization, you can still consider that element of allowances. The car allowances are a cash allowance in lieu of car for strictly a certain level and above, right? Because it requires a certain level and above they need to have. You can cover that under exclusion under defray special expenses. So in the 50% rule under exclusion, there is one, this is my favorite component called defray special expenses, where a couple of components that you can cover under exclusion, right? Which is perhaps a hardship allowance that you can give it, right? Or a project allowance. The only thing in this allowance is it needs to meet that special condition or a special criteria for it to classify under defray special expenses. Okay? Any more questions? I ditched my slides, so I'm here for answer your questions. Yeah. NPS. See, NPS today, how it is paid, right? Let's see, first thing I would advise every person, right? Whether you're HR, your comp, your compliance or legal, first thing is you need to understand how do you decode your own salary structure in the organization, right? First step. First thing what you do is, how is NPS paid today? There are two, right? It is paid even for old regime folks, it is also paid for new regime folks. And it is carved out of your own flexi pay from a salary sacrifice scheme. But yes, it is an NPS scheme. So for an old regime, you get 10%, and for the new regime, it is 14%. That's what the income tax is. So to that extent, yes, you put it and that will come under exclusion, because anyway, any pension and any PF itself is exclusion. So you will place it under exclusion. Clear? Any other? Yeah.
Down on the appointment, so you were talking about appointment letter. Is it similar to Form Q?
No. Here, in the OSH code, they have clearly defined certain statutory elements that you need to consider in the, it's as good. It is as detailed as you will have father and mother's name, UAN number, and with the consent of employee, Aadhaar card number. You have to specify the location of posting. Of course, that is there even traditionally in most of our appointment letter. Skill category in terms of highly skilled, semi-skilled, skilled, and all of those. You need to mention about in our appointment letter, if you see, it will all say that your PF will be paid as per the Act, your gratuity will be paid as per the Act. Act is no longer valid. You need to change it, right? There is also a certain POSH is something that you have to specifically mention in the appointment letter about the POSH. So there are multiple elements that are laid out that needs to be part of your appointment letter today. Right? You should also mention in every appointment letter with your company logo, address, you need to mention your SIN number. employer SIN number. So each of this is critically laid out. And if it's a women employee that you are offering the appointment letter, you need to mention the maternity benefit clause in the appointment letter. All these are mandated. Right? So your current appointment letters are outdated and you need to change.
Retrospectively for everyone.
Don't have to do retrospective.
I need to issue a new one for the existing employees.
Do it effective today also is fine. Whenever you are. See, this one more change, which a lot of people come to us saying that, should I be paying arrears for the wage alignment? So, will I make it retrospective 21st November 2021? What do you say? Yes or no? Yes, no?
Yes.
I hear both.
Yes.
No, you don't have to make it effective 21st November, right? The only thing that you need to take care is, for all the exit cases, you need to pay gratuity leave encashment on the new wages as per new code. But earlier the better, whenever you are doing the restructuring, from that date onwards, you change the gratuity provisions.
So
Yeah?
if somebody has left in December 2025, you mean to say that it need not be recalculated?
You have to. For exit cases, you have to. For exit cases alone, it is effective 21st November 2025 and you need to pay it on deemed wages. So what does deemed wages mean for the exit cases? Because you have not realigned your salaries, wherever your inclusions lie at a 70%, 80%, 63%, you pay on that for the eligible cases. Okay? No, it's not on basic. It's on deemed wages.
Include leave encashment.
Leave encashment is on deemed wages. See, a lot of companies pay currently on wages, which is basic plus DA, or it is on gross. I have seen many companies change to gross also. Right? If you are already paying on gross, you continue to pay on gross. There is no impact for you. But if you happen to do it on a basic plus DA currently, you have to do it on deemed wages. Because now see, one simple logic that we need to understand is, everything the statutory which says wages, PF, your gratuity, your overtime, statutory bonus, everything said in the law wages. Wages for us meant basic plus DA. Now the definition of wages have moved, so you need to pay on wages, which is nothing but deemed wages. Basic, your DA, retaining allowance, and any other inclusions that will form part of 50% of the wage rule. If you don't align, what will happen? Somebody asked me this question also. One of the CFO challenged me to say, I will not align, I leave it. I said, yeah, then pay gratuity at your 75%.
That means you're saying it's a CTC. When you say deemed wages, which consist of your basic, your DA, retained allowance, HRA, PF, and other statutory aspects, which is the sum of it.
Yeah, I will clarify to you.
So that's what we want to understand.
Many times we interchangeably use CTC, total remuneration. Many people have also told me, for our company, gratuity or one other component, variable pay is out of CTC. I said, law doesn't care whether it is out of CTC or not in your organization. Okay? What is the code on wages? If you go back and read the code on wages definition, it tells you all remuneration by means of employment, terms of employment, whether expressed or implied, which is not part of exclusion, will be considered as inclusion and includes basic dearness allowance and retaining allowance. Which means that anything that you pay, expressed or implied, your joining bonus, your retention bonus, your referral bonus, all of it is part of your total remuneration. I told you will not like me if I say this, but that's the truth. Even performance bonus. See, earlier, variable pay, happily we said, page number 185, it's out of RAM, you don't have to. No, they've removed it. Variable pay is exclusion. It very clearly FAQ calls out. I think this is another interpretation challenge where it says variable pay is excluded from wages. What does it mean? It's not wages, but it's part of exclusion. It's part of other 50. And somebody asked me, why should I even do joining bonus? If you question back, from where is joining bonus coming? Terms of employment? When you sign terms of employment, you are going to get joining bonus. So where does it go? It will go part of total rent. So this is where we miss out, right? While yes, some clients have said conveniently we will take it off, we'll see kya hoga, dikha jayega. But some people have said no, we will go with optimal compliance. But somebody also bluntly told it's okay Malti in India, क्या जाएगा? एक दो cases आएगा, फिर एक साल लगेंगे, फिर वो cases के हिसाब से हम change कर लेंगे. Okay, somebody wanted it in English. I'll repeat. Okay, one of the client told me it's okay, Malti. What will happen at the end of the day? It's India, right? So we'll wait for 1 year. Some court cases will happen. Interpretation will happen, and then we will see. If you want to align, we'll align. That is our complete
I
law.
have a question on
Yeah, please.
leave and cash.
Huh.
What is the maximum limit a company should provide as per the law?
Law is deemed wages. Okay.
The number of days.
Leave and cash. Very good question. Tell me something. Whatever labor code says, leave encashment, is it applicable to everyone?
No.
Huh? Everyone? Everyone? Only worker? Okay. Let me clarify. Yeah. Days. I'll help you clarify. Okay. I think this is where we forget compliance. Leave encashment, the labor code, whatever it says, is applicable only for worker. Worker category, what does the labor code says is any leave which is beyond, you can't carry forward beyond a 30-day for a worker category, right? And you need to encash, okay? So, even if you, let's say, and it also states that if the worker at any given point of time says that I need to encash, the company need to encash. Up to 30 days is what they can carry forward. Then what happens to employees? For employees, we continue to be bound by Shops and Establishment Act, and that will prevail. No change for employees. But the only change that you need to manage is leave encashment said it is on wages. Like I said, some companies did it on gross. If it is on gross, you continue to pay on gross. If it is on wages, even for the employee category, you move to deemed wages. Because the definition of wages have changed. Yeah.
But what is the number?
Only for earned leave.
Only for earned leave. Boss, under the encashment, only earned leave will come. Right? What the law also says, for every 20 days of working, you get one day leave. That is earned leave, per PL leave, whatever you want to call it.
So if I cross 30 plus days, right? So can't I make a policy like it will get lapsed or something?
You can't. You can't for a worker category.
No, what about the employee?
For employee, even now you are doing. Don't you do it? Which says, see, of course, Shops and Establishment Act is based on states, right? Some state says 45 days, some has 60 and 65 and so on and so forth, right? Trust me, even on a Shops and Establishment, across company, when you take, we are not compliant in many organizations because we say one size fit all rule, one nation. We don't take care of state compliances.
So for Karnataka, it is 45 days.
45 days, right?
That has to be compliant by all the
See,
organizations.
yes. See, beyond the 45, which is statutory minimum, if you want to lapse, it's fine.
So I have a following question.
Sorry, I'll come to you, yeah?
For a company that operates across states, we take a common denominator, is that something which is acceptable, which is more beneficial?
If it's more beneficial, it's good. But the minimum is your deemed wages.
But I also
No, I'm
read
talking about the number of days.
number of days you can do that. See, then it's a cost, right? Really, do you want to do a cost? Because some states tell you it's lesser and some states more. But if your finance agrees, so I'm fine to do this at a higher statutory base, you can do that.
Otherwise, go by state.
Go by the state minimum.
You correctly also read, so to continue to her point, so 45 days, yes, but I also read somewhere that it is at the discretion of company policy.
Beyond 45 days.
Okay.
Statutory minimum beyond 45 days is lapsable or you want to pay, it's your company policy. Right? Some companies even now have 180 days. Right? Some traditional companies.
I have a question on, again, same thing. Like,
Sure.
if for 15 days, yields are provided, for an employee per year, so all the 15 days, is not utilized, okay, 5 days are utilized and 10 days are lapsed, or it is carried forward, that clarity is required.
See, the lapsable leave is possible as long as you carry forward up to statutory minimum.
Yeah, but in a year, like earlier, we used to have policies saying that only 5 days are carried forward, 10 days are lapsed.
That you need to change. It's not compliant.
So you need to carry forward whatever is the balance.
See, whatever is the statutory minimum, at the end of the year, if the balance is, let's say, if the state says 45, it has to be 45. If some state says 65, it has to be 60.
45 is the latest maximum limit, right?
Correct.
So, but I am talking about 15 days, out of that employee is used only 5.
That's fine.
Then 10 days to be carried forward.
That's fine. See, as long as you're making it up for that 45 days, it's fine. But for the new joinees, you have to watch out. You can't lapse until that 45 days
Yeah.
move on, right?
Location, so location of employer, location of the head office.
It's an employee-based location. That's where you're bound, right? But of course, post-COVID, there's a lot of change in terms of hybrid and remote and all of those. But generally, what is there in your record is your base location, right?
If I can ask for a specific state, like Telangana says up to 60 days. Are we saying 60 is the maximum and I can have any?
In Telangana, yes, 60. You don't have to cover everywhere. But if you want to say that I will keep it at the highest minimum, that's a call that the company.
Wait, one second. We'll give you mic so that many others, if they have same question. Yes.
And the definition also says that the wages is applicable, not, I mean, the supervisory role is
I will cover two questions I will cover in the interest of time. Yeah, last question. Yeah.
In our company, we pay escratia. That means escratia is not fixed. Every year it changes. This year it may be 15%, next year may be 20%.
What is the basis for excretion?
It is in place of bonus, it is to pay escratia.
Statutory bonus.
People who are above 21,000 used to pay as a escratia.
And it is paid annual, monthly?
Annually.
It is paid annually.
Annually. Is it part of it? It is coming under the inclusion or exclusion?
It is part of your terms of employment. It's inclusion. Only if it is performance based or productivity based, then it's
The company performance based.
then it's exclusion. Even if it's individual performance or company performance, it's exclusion.
Right.
Yeah.
So, ma'am, we are.
There's a question here.
Oh yeah. Sorry, man. She was waiting.
So like I'm saying, for Karnataka and other states, it just says 45 days. For Telangana, it says up to 60 days. So are we saying I can consider 30 or 45 as well for Telangana?
No. If it's up to 60, you have to maintain 60, no?
It's up, okay.
See, but it doesn't 60 up to 60 and beyond, right? If statutory minimum is 60, you have to maintain 60. If they have not defined minimum, then whatever is said is a right?
That's the one. Okay, thank you.
Yeah.
So, ma'am, if we are providing performance
Yeah.
bonus.
One sec. Mike will come to you.
Last. Those two questions I answered.
So when we provide annual bonus, it's based on company performance as well as individual performance, right? If it is 100%, let's say 60% organization performance, 40% individual performance. So this will be part of wage inclusion or?
See, any performance related pay, right, or incentive, whatever you call it, as long as it's performance or a productivity based, whether it is an establishment performance or an individual performance, it will still be treated as exclusion.
So it will not come under wage.
Not come under wage. Still, if you exceed your 50% rule, that gets added back. Right?
Got it. So if there is a problem, right? For example, if it exceeds the 50%, that I will come to know only in the month of March. So how I can take care of my compliance?
There are some solutions there. Next session.
We will cover it in the panel. Otherwise, nothing will left in the panel discussion. There's one more question. I think the white shirt. I don't know who asked me. You had a question? No. I think. Okay. I have two questions and I'm done.
Marty, we can ask the questions, we note down and address them.
Oh yeah, that's also fine. So the last two important critical questions that I will address. One was, what about PF? What will happen to PF? Right? So PF has three stories. One, PF where people never had PF in their life. They are called exempt. So they no problem for them. There's another segment called ceiling. This has caused all the confusions in life. Okay? Ceiling means, I think if you remember some time ago, you had this declaration to say that you would want to change your PF to ceiling, which is 15K wage ceiling, which means that your PF will be 1800 per month. But we all happily said we want to continue at 12% actual, and we left it there. Okay? We have the third segment. So for the wage ceiling, which is at 15K and the PF is at 1800 per month, there's no impact on deemed wages for companies and for employees as well. Okay? Now comes to all of us who are at actual 12% of PF. So what does the law say? 12% of wages. The definition of wages change. You need to pay PF on wages. Okay? Some client bring a 2011 judgment to challenge me that the PF is not on wages, it is on basic plus DA. But right now 2011 is gone. 2001 is also gone, 2011 is gone. We are in 2026. Wage code, please refer, I think it's section, page number 24, section 16, which clearly states that PF is on wages. I know you will not like me, but that's the truth.
Who will like it? Because you are telling truth.
Thanks. No. You have to compute on deemed wages at 12%. Okay? Only for ceiling cases there is no change. For people who did not have PF, there is no change. Yeah. Yeah? Both exist. If you ask me today, no, in the survey that we do, more than 75% of the population is still under 12% basic plus DA. Okay? There are few cases who are on ceiling.
So even when a new hire comes, we give them an option for a choice.
For a new hire, you can change. Someone asked me, right, what can I do for new hire? For a new hire, you can over 1800 and bring it over a period of time, you can normalize. Yeah?
So with regards to
Only for exit cases. Only for the exit cases. PF, only for these two cases. Because you're not contributing. Right? Whatever you're contributing. The 21st November, anything on or after 21st November exit cases, those who are eligible for gratuity need to get paid on deemed wages and even leave in cash.
So for example, like for peer calculation, let's say we keep basic at 40 and special allowance at 10% and other thing, and sometimes to 50%. Now
Yes.
you're saying it will be on that.
Correct. See, ideally, it's not wise to change your basic to 50% because basic is taxable income. You can't help it. Now that 50% is a wage reality, keep the basic is at whatever percentage, 30, 35, 40, whatever, because nobody is stopping you to change that. Rather, whatever the 10 or 15% that you have, some of these LTA, the children education allowance, all of it is tax exemption. So provide that to employees, so they will thank you for it.
But it depends on what regime they are on.
Whichever regime. See, even if it's 1% of the employees, they'll make noise, right?
No, I'm saying if they are a new regime, then this would not.
This won't happen. If your company has 100% new regime, don't bother. Yeah, but meal voucher is there. Okay. Yeah. No. This is all interpretation. The law has already said, the final rule also that I quoted, you can refer page number 24, section 60 of Social Security Code. It says PF is on wages.
So now technically whoever was on the third criteria where it was on the basics, so their PF will increase and their take home will reduce.
See, I'll tell you what, one more magic. If you come to us and do the wage structure, we protect the employee net and still do the wage alignment. That's my selling